why Doge has stopped pumping, and why it could continue to consolidate for a little while longer. All that and more coming right up. Hello and welcome to the Crypto Jungle. My name is Baloo, and on this channel I teach you how to trade and invest in cryptocurrency. We eliminate a lot of the hype on this channel. We're not going to steer you the wrong way. We are one of the most honest and realistic channels in the space, and if you want to learn how to not only make money in crypto but keep it, then don't forget to hit the subscribe button. I do this every Monday, Wednesday, and Friday at 12 p.m. Eastern Standard Time, so tune in to those times to hit the live stream. So we're going to talk about Dogecoin. So there are some fundamental factors that go into why these coins pump, and I'm going to talk to you a little bit about Wyckoff theory and the theory of the composite operator, or the composite man. Basically what we call them whales. Okay, so how whales trade, how whales operate inside of this ecosystem, and what kind of effects that can have on the token supply. So let's go ahead and just take a look at this wallet here. So for those who don't know, some of the biggest advantages that we can have inside of cryptocurrency is the ability to actually go and look at wallets. Now, in the case of Doge, there's one whale. There is one mighty large whale that actually holds 28.7% of the entire token supply in one wallet. Whether that's one individual, whether that's an institutional entity, whether that's Elon Musk, it's entirely up to you what you think. But the point of the story is 30% of the token supply is locked in one wallet. And I've done a little bit of digging, and I want to share a few things that are quite interesting. So when we look at this wallet here, I'm actually going to zoom in. I'm going to scroll down to the bottom and try and look at the most recent the early activity of this wallet. So there was a couple test transactions, and then we had 1 million Doge get bought. Then we had 4 million Doge get bought and bought and added to the wallet. But then we started to really accumulate. Now, this is what whales do. The movements of the whale can't go unnoticed. We can see it in the price candles, we can see it in the volume. So if you're new to the Wyckoff method, all it does is track the large players so that you are able to trade alongside the most profitable trader in the ecosystem, which is always the whales. The whales always win because they have all the power, they have all the ability to manipulate price and lock up token supply. So we have a lot of evidence on this wallet showing a huge accumulation campaign on this wallet. 23 million Doge added, 11 million Doge added, 5 million Doge added, 524 million Doge added. So there was a huge accumulation campaign that happened in this wallet, and then it kind of cooled down. There was not a lot of transactions that were adding. You can kind of determine that maybe this individual was a miner. There's a lot of very small transactions that were adding to this wallet as well, so that could be some mining, some Doge mining. And then we kind of get to the point where that individual stops adding to those positions. So I've gone ahead and charted this out. This is basically the beginning of this wallet's existence. This is where the original test transactions occurred, and this is where the last large investment that individual placed into that wallet. So for those who are in my private VIP, you are very well versed in this, in what we are seeing here. This is a Wyckoff accumulation range. What occurs in the accumulation ranges, it is the composite operator noticing that the supply of the token is vulnerable, and noticing that they can really make a dent in locking up some of the token supply, and beginning their accumulation campaign. They decide on a price that is in the value zone according to the sentiment in the space and their abilities to move price. And every time we come to the bottom, they basically buy more tokens. So we have a few signals here. We have the seller's climax, the automatic rally, and the secondary test. That indicates phase A, which shows you the width of the range. So let me just draw what I'm talking about here. I got my pencil here. So, the width of the range is decided by those three touch points right here, okay? And once you have those 3 touch points established, you're going to observe the movements of the price action and watch the volume characteristics, making note of any time that the whale steps in. The whale's footsteps can't be hidden. You can see what they're doing, especially when you're in illiquid assets. So when we do some of this stuff in hindsight, we can see that, you know, there was a whale that really capitalized on a very good opportunity in this position in Doge, because they had the ability to buy 30% of the tokens. That is huge. That is massive. So when they own the lion's share of the tokens, you know, the next wallet address down owns just under 4%, just to put it into perspective. So far and away, we have one wallet that is very much so a whale inside of this ecosystem. So we have a couple other signals here, you know, secondary test. We're just testing the area of the support down in this area right here. Then you get a spring. This often occurs, not always, but often you get this kind of spring where we break the lower end of the range. We get bought back in. And when we're bought back in, that's when we get our sign of strength. So we got a sign of strength here. That's indicating that yes, the purchase campaign is complete. Yes, demand is in control. And the next phase is markup. And that's exactly what happened. So we had this LPS, last point of support, occur, and then we got our breakout right here. So if you were paying attention to this, you would have known that you needed to buy Doge on the breakout down at basically a half a penny. Doge is at a considerable, it's at a much higher price right now. To be perfectly honest, I didn't see this because I wasn't charting Doge, because there aren't really any fundamental factors that attracted me to Doge. As I'm sure those who kind of understand the protocol, it was created as a joke coin. So, you know, I'm not going to get into why I didn't take a position, other than the fact that me personally, I like to invest in projects that have strong fundamental characteristics attached to them. But anyways, I want to talk about what is going on modern day. If you took a position in Doge, be very cautious. If we go back to the wallet addresses here, by the way, I have linked this wallet address down in the description below. So if you want to monitor this wallet, which I highly recommend that you do, monitor the sells or the withdrawals. I guess it can't actually confirm a sell, but monitor the withdrawals of this wallet, because when this wallet starts to withdraw capital, like it did yesterday when Doge was going crazy and you know, the price stopped, you know, you can kind of determine when to sell. You know, sell when the whale is selling. It's very simple. You know, these are the strongest traders in the space. Yesterday at about 1931 or 1900 hours, 1931, I don't even know how to say that in military time, but you know, 1931 hours, whatever it is, 100 million Doge were removed from the wallet and likely put onto exchange to sell. And funnily enough, the price stopped ascending. So there was a flood of supply that entered as Doge began to really increase. So keep an eye on this wallet. Let's go to modern day. Let's check out what's going on here. Just insane. Like, look at this markup. Insane markup. For those who are wanting a little bit more information, follow the links down below and I can teach you how to trade alongside the whales. Yeah, we missed Doge, but there's other opportunities out there as well. So modern day, let's take a look at present day. Let's go down to the 4-hour chart. So we have a new trading range that is developing. So we have 100 million Doge that were flooded onto the market. That is a fresh batch of supply that at the time of selling equated to about $7.3 million. What is that? $7.3 million worth of Doge flooded onto the supply. So that supply needs to be absorbed. There's a lot of demand in Doge right now. Don't ask me why. That's not what I'm here to talk about. I'm just telling you that there's a lot of demand for Doge right now. So that supply will likely be absorbed, but this absorption takes time. So we're likely going to consolidate in here a little bit longer. We've got our buyer's climax right here. We've come down for our automatic reaction right here. So the next stage that we're looking for is our secondary test, at which we will probably consolidate. Whether we consolidate at the bottom of the range or the top of the range, that's yet to be seen. But the long story short, we don't need to FOMO into this. We don't need to panic into this asset. There's no urgency to take a position right now. Allow the weak hands to be shaken breaking out, allow this asset to kind of cool off a little bit and reaccumulate, because that's the name of the game. You know, you want to buy the breakouts of these accumulations. You don't just go and chase big green candles. They more often than not will burn you. So yeah, that's basically what we're looking at here. So I am going to wrap it up there. I just wanted to quickly talk about Doge. So if you enjoyed this content, please leave it a like. Don't forget to subscribe. And if there are any projects that you would like me to take a look at, leave them in the comments section down below. And until next time, please trade safe. It is a jungle out there. Peace.